Hey everyone, Cash King here, and welcome to the channel. In this video, we're going to talk about the key stock market terminology you need to know in order to effectively invest in the stock market. Don't forget to like, comment and share the video, and subscribe to the channel for more content. Right, without any further ado, let's get started. So first up are the terms bull market and bear market. A bull market is where stock prices are increasing. This is where the market is bullish. And the opposite is a bear market, where stock prices are decreasing. The bid price and the ask price. So the bid price is the highest price a buyer is prepared to pay for a stock, whereas the ask price is the lowest price a seller will accept for a stock. The difference between the ask and bid price is referred to as the bid-ask spread. The spread represents the market maker's profit, who's the body or broker that you're trading with. Bid-ask spreads can vary widely depending on the security and the market. Current price. So this refers to the actual selling price of a stock, determined by the last available trade. So when you see commentators on Bloomberg, for example, giving a specific price for a stock, this is the figure they're referring to. Liquidity. So this refers to how fluidly or easily shares can be traded at stable prices. So if a stock is very fluid or there's high levels of fluidity, that means that a lot's happening and there's a lot of buying and selling. Trading volume refers to the number of shares traded in a day. It can be relevant for other time frames as well, and this is a key indicator on a lot of graphs and charts, and it's very important in technical analysis. When buying stocks and shares, there's a couple of different order types you can use. The first is a limit order, where the order executes as soon as the stock reaches a certain price point. And the other is a market order, where the order executes immediately as soon as you click the button. The term executed or execution merely refers to when an order is processed. So you can say, I executed a trade, and that basically just means I've bought the stock, I've executed what I wanted to with it, I've either bought or sold it. Now these two terms are very common. If you go long on a stock or you have a long position, it means you're expecting the price or value of a stock to increase. And if you're shorting something or going short on a certain stock, it means you expect the value to decrease. Averaging down. So this is when you buy more of a stock as it descends in price. So for example, if you buy 50 shares in a stock at £10 and another 50 at £5, the average price will be £7.50, and this will be how it will be displayed on most platforms. Authorized shares. So this is the total number of shares that a company can trade. Please note that this is different from outstanding shares, which refers to the number of shares which have already been sold to investors. Public float. So this is the number of shares that can be traded, excluding the shares that insiders have. So essentially, it's just the number of shares that retail investors, like you and I, can purchase and trade. Market capitalization, or market cap as some people refer to it. So this is the total market value of a company's shares on the market. So this is calculated by multiplying the share price against the total number of shares available. IPO, or initial public offering, and this is the process of offering shares of a private company to the public in a new stock issuance. So if a company is doing quite well and they want to issue some shares and raise some cash, they'll have an IPO. Secondary offering. So this is the subsequent sale of new or closely held shares by a company that has already had an IPO. Again, this can be done to raise some more cash and issue some more shares. Mutual fund. This is an investment fund of pooled money from many different investors, usually to purchase stocks and shares or another type of security. The term mutual fund is actually an umbrella term, as there's many different types of mutual funds. Foreign exchange, or Forex for short, is the market of trading currencies. These are always expressed as currency pairs, and it's important to have an appreciation of currency differences and strengths when trading stocks and shares, especially if you're buying them internationally. Exchange-traded funds, or ETFs for short, are a grouping of securities or shares which are sold on an exchange. So in one purchase, you can essentially buy different shares in different companies packaged up as a single product. Dividend. So this is the payment a company pays to its shareholders as a proportion of its earnings on a regular basis. It's worth noting that not all stocks have dividend payments, so you'll need to check. The yield refers to the amount, always expressed as a percentage, that a company pays shareholders for holding their shares. So if you're holding a number of shares and they have a high percentage yield, you're going to make some good gains. So that's it for now. Thank you very much for watching. Don't forget to like, comment and share the video, and subscribe to the channel for more useful videos on investing. Best of luck with all of your investments, and I shall catch you next time. Cash King, over and out.